and welcome to Thinking Beyond Cryptocurrency. I invite you to think with me today. So at any time, if you have a thought or a question, jump in, I will speak about it. There should also be a bit of time at the end for more structured discussion. Not many more words to leave on my profile. Maybe interesting to know my background originally is in information technology, and then cybersecurity, audit, and ultimately custody is what I'm doing now at Bitcoin Suisse, always with a focus on infrastructure. And now crypto financial infrastructure, of course, is what we're building at Bitcoin Suisse to help the next wave of people and companies on board to crypto financial services. Bitcoin Suisse, we've been a very early participant in the crypto valley, even before the crypto valley existed from a context of branding. 2013, we got started as a brokerage and custody house. And very early on, we realized that our clients want to see more from their assets than just store them safely at Bitcoin Suisse. It's about using the assets to get a yield, to invest, sometimes to speculate as well. So we've been part of the first ICOs. We helped Ethereum Foundation with the fundraiser, Tesla's Foundation, and other projects throughout the history, thinking beyond just what it takes to safely let people trade and custody assets. In the meantime, we are close to 300 people, most of them located here in Zug, and close to 100 people in technology, supporting us in building decentralized products for our clients. Two months ago, we sent a coin to space. Look at this. We're thinking even beyond what we have here and today. And when you look down to the earth, you see Europe, you see Switzerland. It's beautiful. That's our home, and that's what we use as a home base to build products and to have a vision of where we go. And this is a nice segue to actually, the coin has value. It can be used to store digital assets, a Bitcoin coin. And the custody of digital assets, of course, is at the center of making use of more of digital assets. We start with store of value, that's custody. We start with means of payment or means of, payments. But very early on, you had staking, you had NFTs, you had decentralized financial products in general. So that's the wave of products and use cases that all center ultimately in custody, in the control of the private key. And when you look at the custody solution today, you need one that does a lot more than just store crypto assets. You need one that satisfies all these use cases, and that's what we're going to speak about today. First, we take a little bit of detour back, just like looking back down to Switzerland and Europe, we look back down to the old times of the traditional financial services infrastructure. As recently as 2018, people wrote scientific papers about financial infrastructure saying that SWIFT is the way to go. It's never going to be replaced. Well, we're all here because we believe that's not the case. We know that's not the case. So we are all here thinking beyond the traditional world to digital financial assets. Before I'm going to speak more about what's beyond custody, let's take a little detour into custody, extending also on what Boris said before on copper. Many of the words, things he mentioned are true, so I'm going to skip some of the elements and focus on what's new here. You all know that whoever controls the private key also controls the asset, the Bitcoin. And that's what's key in crypto assets, in custody. And that's what's leading to the situation that if you don't manage your private key correctly and adequately, then your assets can be stolen, your assets can be lost if you lose the private key. Boris has spoken about that. It's a different chart showing the same thing. And ultimately what you see here is that all of the custodians speak about the risk that you have in digital assets if you don't have a proper custody solution. What is a proper custody solution, you may ask? And that's what I'd like to explain here. Comparing again to the traditional environment. On the left side, you're all familiar with a bank account. And your bank has a core banking system sitting under the hood, very complex. It takes care of all the transactions, the security, moving around stuff, investing, everything. What you see as the client is a front end. It's an app or a browser. You can even call your client advisor. And usually when you speak about the app or a browser-based website, you have a password, you may have a second factor, so that's what's giving you access to your assets that are managed in the core banking system, and they're uniquely identified using an IBAN number that you use to send assets out, and especially also to receive assets on that account number. When we look at a puristic crypto wallet, then you create the private key using a wallet, software or hardware. It can be a ledger device, Trezor, or a phone application. It's very simple and very high risk because you're responsible to keep the private key secure. You're responsible to not lose the private key. And what a good custody solution does is to merge both environments, where you have a full-fledged application letting you control your private key from the security of a managed environment, letting you access the additional and new functions over custody, and giving you the security and certainty that your private key will never be lost, and it's not possible to abuse the private key, so to steal from your assets. Both of these crypto custody solutions are exactly that, crypto custody solutions. So they share the public key address that is used to identify your address on the blockchain. They share that there is public key cryptography used and the private key is to be managed. This is a lot more secure and a lot more user-friendly. What's going on under the hood? I mentioned public key cryptography, and that's really what's going on under the hood. It's all coming down to technology and science that is more than 40 years old. Public key cryptography. 1976, that's when I was born, actually. 45 years ago, people started putting down on paper what it means to split keys in a public and a private pair, to make it easier to share them and to sign or to encrypt messages. And that's still the same technology that's used in blockchain today. It's also the technology that secures your web shopping over the internet or your applications that speak from the phone to a server, all the same application. So it's very simple and very well understood, the security that we get from this. It's the system that sits on top of it that makes a custody solution good and proper. And such a custody system will typically have three components. We've also seen these components in what Boris presented earlier. You have a layer that interacts with the requests. We call this a request manager, for example, that accepts the information about, do I want to send something to another address? Do I want to delegate some assets into a staking pool? Or do I want to do some DeFi transaction? Then you have a policy engine that checks, is this transaction in line with the rules that the owner of the address has established? So if it's below or above a certain threshold of value, maybe different approvals have to be given, or a different time delay has to be enforced between entering the transaction and signing it and releasing it on blockchain. And when all these checks are true, sufficient approvals given, then the transaction can be signed in a high security cold storage environment, such as a hardware security module or HSM, and ultimately broadcast it to the blockchain, to the internet, and become effective. These are the 3 key elements that every custody system will have. Now, we're also going way back, but it's important to understand the elements that form part of blockchain infrastructure. Besides custody, which is securing a private key ultimately and doesn't necessarily involve any action, we have the element of sending assets through space, through the blockchain. And then we have multiple participants that are needed to make this happen. We have the miners that mine blocks in proof of work or proof of stake. And we have the blockchain nodes that validate transaction and confirm that, yes, indeed, all the transactions that have been mined into a block are valid or not. That's the typical participants in a blockchain transaction. There are interesting business models possible in this case, for example. We're soon going to hear more about miner extractable value around decentralized exchanges. There are a lot of research going into this over the last 9 to 12 months because decentralized exchanges and decentralized activities are soaring. And who's at the pulse of everything that's happening? It's the miners. They see all the transactions, all the activities that should happen on the network, and they choose which one they accept. They may choose exactly the transaction that benefits them most. Or, if they're not well-behaved miners, then they may choose to inject their own transaction to benefit from a situation, such as front-running a transaction. Somebody wants to trade, they trade a little bit more efficiently and mine their own trade into the blockchain instead of the other trades that they also see in the block space. And I say it's a business case, and I say not very well-behaved miners. These are ideological questions. Whatever is possible in the blockchain is also legal in the blockchain from a blockchain perspective. And then it's a matter coming down to your business model and ethics. Do you want to benefit from this situation? We also need to be aware that besides solid enterprise custodians such as Bitcoin Suisse, Copper, we've heard them before, we have lots and lots, millions of participants in the blockchain that use these consumer devices. And they're also custodians in their own way. And they also need to think about what's beyond just storing assets and transferring them back to the exchange or to a friend or to a company for payment. So they share the same challenges. What does it take to think beyond custody? And what we have here is a few examples. Very early on, about 2015-16, we've seen the first project starting to think about what's beyond proof of work. It's a lot of energy consumption. There needs to be a better way. Hence, they came up with proof of stake. There were a few ICOs around that time, Tezos, Cardano, others. And eventually, these blockchains went live around 2017, 2018. And very early on, good custodians realized that this is changing the game in custody. Our clients wanted to be able to participate in proof of stake because it's not only securing the network and helping the community, it's also earning a reward, staking rewards. It's getting a yield on assets. Just like in traditional financial services, when you lock up your assets through a loan or investment, you expect a reward. And proof of stake is the same thing. And you should have the same expectation to your custody solution today, that if you lock up a proof of stake asset, it should get you a reward. I show some prominent examples, and I mean, these numbers are crazy. As totally unused from the traditional world. And these numbers, on the other hand, are quite conservative when it comes to the crypto world. In the meantime, there are more obscure, more complex staking opportunities that will get you bigger percentages. So it's important that any custody solution that you have or that you evaluate offers staking on proof-of-stake assets. What does it mean to stake? Typically, the assets stay in the high security of the vault of the custody solution, and they are delegated, like put on a loan, to the actual staking environment. Frequently, we call this a validator, because it's validating transactions on the blockchain. So we have the best of both worlds. The assets are staying in the security of a custody solution, but they're able to put on a loan, delegated and participating in the blockchain network to secure transactions. You get a reward, you get your yield on the assets. When we look at how is this implemented in the custody solution, it's quickly becoming very complex. Because every blockchain is different, every proof-of-stake implementation is different. And you see this immediately from the numbers here. Different yield, different lockup periods. That's superficial differences. But under the hood, the commands look different, the control looks different. Some of them require a one-step delegation, others have a two-step delegation, where first you bond to a controller and then you nominate two validators. That's the Polkadot and Kusama case, for example, or the a little bit older blockchains such as Cardano and Tezos. They have a one-step delegation process. Some of them have a lockup, also with entering into a staking agreement where you need to wait a few days or cycles or epochs, whatever they're called, until you start getting rewards. For others, you start earning rewards immediately. There's a huge complexity in making staking work. That's where a good custodian really excels, in mastering this complexity and hiding it behind an effective user interface. Any questions on staking? Otherwise, I'm going to go next. Yes?
What's driving the percentage yield? Is that supply-demand situation? Is that something that's expected to be dynamic over time?
I'll try to answer this, and if somebody else has a better answer, please shoot in. So you were asking what's driving the percentage? Is it supply-demand or other elements? And from what I understand, that's pretty much baked into the protocol and the white paper that the foundation set into. So the crypto economics of the blockchain in question. And then it's slightly changing based on the actual performance of the validator. So if they're able to validate at every opportunity that they get during the proof-of-stake process. Let me hold on for a second. Please come in.
Sorry, if anybody else would like to sit down, the right
All right, so the question was, what's influencing the staking reward that you get? And the basic size is coming out of the white paper of the blockchain, and then it's heavily influenced by the efficiency of the staking pool or the validators. And that's where a good staking pool obviously is achieving 100% reward or a bit higher even, sometimes depending on how you calculate. Because what's going on under the hood is that each of the validators gets an opportunity to contribute to the next block that's equal to the percentage of the size that they have over the overall number of validators or validating assets. So if your validator, say, has 1% of all staked assets in a blockchain, then you should get an opportunity at 1% of all chances to stake, so to get a reward. And when you have that opportunity, you need to take it, so you must not miss it. The validator needs to be up and running. And then you optimize which transaction you take in and which control points you do. Again, huge different implementation between the different blockchains so that you optimize the reward of the block, of the staker, the validator, and ultimately the rewards that are paid out to everybody delegating assets into the validator.
Here's a slightly sideways question then. So the idea being that you said it yourself, staking is complicated. You know, it's like unless you happen to be a techie person or in the world of finances or you're used to that kind of stuff, it's kind of like you look at it and you go, like, pain in the ass, it's just complicated, right? So you end up not doing it. And for general people, not the people in the room, but the people that may be, in theory, potentially going to benefit from this transition in the financial system. So then we then become dependent on blockchain Swiss or whoever it is so ultimately I just see a process where ultimately blockchain Swiss just basically replace credit Suisse as becoming this kind of, you know, we because it becomes too complicated for individual players, we end up using these services, but then we end up still beholden to whether it was Credit Suisse or, you know, central bank.
Bitcoin Suisse, yes.
Yeah.
Yes.
No, that's what I'm saying. In 10 years' time, because we all ended up staking from Bitcoin Suisse,
Yeah.
like, how do we remain decentralized and empowered as individual sovereign financial entities, whilst with complexities of the system that are driving us into the arms of corporations?
It's a good and loaded question. And let me take a step back on this. When Satoshi and cypherpunks released Bitcoin and started working on it, of course, the motivation behind it was to make us all less dependent on intermediaries, and especially also central banks and such. And blockchain now offer this. And everybody who's sufficiently economically savvy and technically savvy, and security-minded, I would add, is able to do this. But few of us actually are able to do this, and even those of us who are maybe don't want to, because they understand the risks of being responsible for being your own bank. So for a long while, I'm convinced we are going to have intermediaries, such as Bitcoin Suisse, who are here to make crypto financial services accessible for the everyday person. These solutions are going to be improved. People are going to be more technically and economically savvy over generations, so that they will be less and less dependent on intermediaries. That's my personal expectation, but I wouldn't say that's the thing of the next 2-3 years. We're speaking quite long term. And that's basically also my mission at Bitcoin Suisse, is to offer solid, secure, and accessible services that make it crypto financial services available to people who cannot or who don't want to be involved in the technical complexities of
Basically
blockchain.
everybody.
Almost everybody.
Almost
Yes.
everybody.
Yes.
You're showing this list with the rewards. Is this extensive of your services, or do you have many more? And if yes, how do you choose which ones you offer the service to? Because obviously you could select some random coin that offers 100% whatever, and then your customers put it there because the number looks really nice.
Yeah. Right now, I believe these are 7 blockchains, and that's what we offer today. What's important for us is that we work and offer blockchains and crypto services to clients on blockchains that we know are secure and stable. And that's what this shows. We're also continuing to evolve and adding more as the ecosystem evolves and more participants become secure and stable. With this approach, we're obviously lagging behind a little bit behind people who manage their own assets and can jump to the next opportunity at any time. They have a different risk appetite than what our typical client has. And we're also happy to work with specific clients where we both understand the particular risk appetite to make special solutions possible. But then we don't necessarily put it on a website and offer it to everybody, because these are special, require a special risk appetite and typically also special investment to make it happen. As I said, it's complex and complicated, and we invest heavily in automating these solutions and making them available securely to our clients.
Well, just wanted to add, part of the answer to the question why I think 20% yield in one protocol and 7% in another one. You said, obviously you have this notion of performance of the validator. So if the validator is up, or if the validator is missing attestation block rewards, or I think 100% of these attestation block rewards would reach 100% of the 20% yield to get annually. But then the 20 or 7%, depending on one protocol to the other, is, I think, based on three factors, right? The inflation of the protocol. So how many new tokens every year the protocol decide to create. So in the case of, I don't know, Ethereum decides to create 6% new tokens every year. Then the network fees, right? If you have a lot of people using the protocol, it will pay some gas fees to use the protocol to send transactions, and these gas fees goes back to the validators. And on Ethereum, there's this new concept of ABV, as you say, and this is a third factor of how much you can have a bigger yield, because NEV, it's not people paying to gas fees directly to the network, but it's people paying the miner or the validator, staking validator, to pass transactions, and this goes to the validators. So I guess these are the three factors why you have 7% yield on Cardano, or you have 15% yield on Ethereum tomorrow. Today's 5%.
Thanks very much. Yes, that was a nice explanation. Much better said than I could have said on what are the three factors that add together to the overall expected reward on these proof of stake blockchains.
Just simply.
Yes. Okay. So you have three factors that come in to make up this reward, besides the efficiency of the validator. First, it's the base inflation that's baked into the white paper, the protocol. Second, it's mining fees that are added for transactions in each of the blocks. And third one is miner extractable values, where miners can choose to prioritize or inject specific additional transactions based on mostly DeFi. Fair summary?
I got one question regarding I just checked it to what has some people in Swiss. We need, if we want to stake our assets with the website, we need to have an account with Bitcoin Suisse. If it's possible to just get our wallet, for example, MetaMask wallet, to be able to stake it. Because the reason it makes a difference. That means, for example, if I go to a MetaMask wallet, I do not want to have an account with Bitcoin Suisse. I just want to connect with my MetaMask wallet and stake it. That's it.
Yep. Okay. I take this as the last staking question, then we'll continue. We should still have a little bit of time at the end. So your question was, is it possible to use Bitcoin Suisse's staking service, but not use Bitcoin Suisse's custody service? So basically to delegate from or nominate from outside into Bitcoin Suisse's staking infrastructure. And the answer is right now, this is not possible. We want to keep it simple and have a accessible user experience for our clients. And we do this by offering everything out of one hand. Okay, we add a little bit of complexity now when we speak about decentralized finance. And everybody's been speaking about decentralized finance for quite a while by now. And most people mean different things. Many people mean lending because that was one of the first profitable use cases and also use cases that actually worked. Then we had decentralized exchanges. And what we see now is a whole lot of basically all kinds of financial services that we see in the traditional world. And I love how this is proliferating. And that chart is almost a year old, November 2020. It's obviously outdated, but I didn't find a better one. And the article, The DeFi Stack, by Multicoin Capital is still very recommended read. What we see is that most of the geniuses working on blockchain are now putting their genius to work in replicating traditional financial services processes and functions and making them decentralized in the blockchain. The reason is not that they want to replicate today's world, typically, but this is a foundation. This is the infrastructure, and it should get us to the next level, beyond just replication, what we have today. That's where my imagination starts to be limited. I know today's world, I see where many of these functions replicate today's traditional world. It's very hard for me to see where is this going. And many of us here, I see from the shades in the hair, have been around 20 years ago in the dot-com boom, at least as young people. It reminds me of this, because then we had the internet, we had the web as foundational technologies. And then we had traditional business models put into the internet, e-commerce, Amazon, pets.com. Many of this was very successful. But what really came out of this was Google and Facebook and all of these companies. And that was not imaginable at that time, that these companies will be based on internet technology. And it's not imaginable to me as a person right now what new business models are going to be built on these foundational elements that are becoming available on decentralized finance now. But what we can imagine, of course, is what are the business opportunities that our clients need right now. So when you're here and look at where can you put your capital to work and get a yield in accordance with your risk appetite, and this is the right discussion to have. And this is a good discussion to have with your custodian. How can they help you make this happen? To keep your assets secure and to participate in decentralized finance. Honestly, not all of these protocols and use cases can be had from the security of custody. For some, you need to lock your assets outside of custody in a smart contract somewhere in the internet. That you better hope it's been audited properly and nobody was smarter than the auditors. And the auditors were honest and not abusing what they found, because we've seen examples of all of that. So DeFi, when your assets are leaving the security of your custody solution, it's becoming a whole new high-risk environment where things are moving so quickly that very frequently assets are lost, stolen in this context typically, to the multiple millions. We just had a hack a couple days ago, 100 million lost. Sorry, I should say stolen, of course, because somebody has them still. And frequently, these hackers are playing around. They're not very good in their operational security, so they're found out quickly and assets can be recovered. But do not bet on this. Also, attackers are becoming smarter, will be better prepared, and then these assets will be gone forever. So that's also a discussion to have. Before your assets leave the security of custody, make sure you understand where they're going. And I can only support Boris, who said, as a custodian, Copper is checking which smart contracts, which DeFi protocols they enable based on a risk assessment, based on understanding what can happen to their clients' assets. Very similarly to what I said about staking at Bitcoin Suisse.
If Bitcoin Suisse were hacked, and this was probably part of the previous conversation, were hacked and lost a chunk of money, with the Swiss regulatory system, are you insured so that do you have some kind of offset pool so that it's probably you won't be, but if you were, is that how does that work for Bitcoin Suisse?
That's a good question. What happens if, for whatever reason, somebody is able to hack Bitcoin Suisse? And I would add to this, or Bitcoin Suisse goes bankrupt, similar to what Boris said, similar risk. What we have is our client assets are always safe. We do pool some assets. Those that are pooled are underlined with a bank guarantee. So we have more than 150 million Swiss francs in a cantonal bank from around here, very high trusted bank, covering every single Bitcoin and other crypto assets in our pool storage. So if whatever happens there, it gets paid out from the bank. Everything else is in secure cold storage on separated addresses. For each client has their own address, totally separated. And when you're a client, you can download your account statement and you see exactly what's covered by the bank guarantee and what's covered on separated cold storage addresses. Back to DeFi, actually. Any specific questions about DeFi? Good. Then let me show you Vitalik's NFT. Oh, you had a...
Does Bitcoin Suisse fit in here? Or do I want to see it, or is everything?
We're not everything. We're only 300 people. We can't make everything possible with 300 people. No, that's a huge universe. We're here helping our clients navigate that environment, figure out what are the types of DeFi use cases that are in line with the risk appetite that they have and make DeFi available on case-by-case basis. Vitalik's NFT collection, as shown on rainbow.me, and only a very small extract of it. NFTs, non-fungible tokens, have come up as a huge hype again. As with any bull run, we had the previous bull run in 2016-17, immediately followed by CryptoKitties and CryptoPunks, even at that time already. And this type of non-fungible token that we see here, that's the most prominent type that we're all speaking about right now, but it's a very simple use case. It's putting art, pictures on the blockchain, tying them to blockchain addresses. And this is Vitalik's address. People have sent him pictures and he's keeping them, and then everybody can look at them. That's the transparency of the blockchain. What we all expect is that the very simple NFT use case that's resolving around pictures now is very quickly becoming a lot more complex, because these are unique tokens. Each token is unique. No two are the same or necessarily have to be the same. But they're not fungible, so they cannot be connected and torn apart again. Meaning they can be used for many other different use cases. They can represent a liquidity pool share in Uniswap. They can represent a domain address in Ethereum name system. That's use cases that already exist now, but are hidden, only visible to experts. Or they can represent a token getting access to a service. Digital identity is also a very strong use case that's mentioned frequently. Right now, we are all speaking about what does it take to offer custody of NFTs. And then custody suddenly becomes a fancy pants user interface question, because how do you show all these pictures in a way that looks great? And suddenly somebody doesn't only have a picture, but also has a piece of music. How does that fit in? That's a simple challenge to solve. But we're thinking beyond the simple challenge. We're not trying to understand what are the use cases that come into NFTs, and how do you represent these use cases in a proper custody system so that clients can use NFTs for the service that they're intended to do. When we speak about identity, they're going to be used in maybe a lock or a card. Then they need to be able to send into the card and take it out again. And that is evolving and moving so quickly and so unpredictable, for me at least, which one of these ideas are going to succeed and which ones are going to just blow up and be nice, and then 2 months later nobody's going to speak about them. That it's probably wise to be a bit careful about which use case to invest in beyond digital art. Those of you who are art collectors know that you can pay insane amounts for a picture, whether it's physical or virtual, and that collections have a value in and of themselves, and the same applies to digital collections as well. Any questions about NFTs?
And maybe now, now's not the time to answer this question, but I like the issue about identity and digital identity. But what I'm not sort of really understanding is let's say I have a digital identity and the blockchain is so immutable, and I've got this NFT that accesses all these different things in a really positive way, but somehow it's corrupted. How can that corruption be changed going back into the... Maybe now's not the time for that.
Let's take this offline over a coffee afterwards. That's a good one. Yeah. Okay, so when we think beyond custody, these are the important topics that we think about right now. And I think you got an impression. Some of these have been around for long enough, and the markets and the business models and the services have matured, and they can be integrated into enterprise custody solutions with HSM backends. They can be integrated into the traditional consumer devices, wallets such as Trezors and Ledgers. Many of them still require specialized software solutions, such as MetaMask that somebody mentioned, or such as in the Polkadot universe, Polkadot.js, which is a specialized solution. And again, that's just adding to the complexity for users to deal with a great number of different custody solutions. Also to the complexity for users for all of these software wallets and consumer devices, hardware wallets. Private keys need to be managed. Seeds need to be written down and not lost and not shown to somebody who's not trustworthy. Well, actually, better don't show it to anybody. So, depending on your risk appetite and your technical abilities and interest to spend time on this, might also be worthwhile to wait a bit until these services are properly supported in a financial intermediary such as Bitcoin Suisse. Obviously, as I said earlier, it's our role here to be at the leading edge of crypto financial services, to monitor and risk assess these new protocols and make them available to clients as soon as they have reached the right maturity. Good. Then we think a bit further beyond as usual, by first looking back. 20 years ago, we had the Microsoft, Oracle, IBMs, and Intels of the world, huge and dominating not only technology, but the share indexes of the world, NASDAQ, NICE, etc., biggest companies in the world. 20 years later, this has changed to the GAFA of the world, Google, Apple, Facebook, and Amazon. We all here in the room, we know what this is going to be. It's going to be crypto financial services. What I don't know is which 1, 2, 3 of them. And what I suspect is it may not be 1, 2, 3 of them. What I hope is it's going to be hundreds and thousands of them for a proper decentralized environment, so that none of them has too big a share, too big a power, because big share and power corrupts and concentrates risks in the hands of a single protocol. And in the near future, and maybe a bit farther future, all of these protocols still have their switches and control levels built in, where ultimately humans, people are involved. And as people, we're all weak. So that's what we're working towards. People developing DeFi protocols, they're trying to remove themselves out of the equation. That's what we have done in our own custody at Bitcoin Suisse. We have removed ourselves out of the equation so that the custody system works independently of individual people, and nobody, no single person has access to all of the required elements in the solution. And that's the kind of decentralized control that you need to know that your assets are secure. We are working, actually a little bit of side note here, with Raphael Domjan from Solar Stratus to go to the stratosphere where no plane has been before, just powered by solar energy. It's a 2-year project, 2023. We're all expecting that he'll be able to take that brand new technology, leading edge development into space. 15, 20, maybe 25 kilometers up there in the air. And Bitcoin Suisse is going to be part of it, because we see what he's doing is advancing solar energy, is advancing humanity, and we're doing the same in crypto financial services.